Walmart plans to cut about 1,500 jobs in a restructuring aimed at trimming its expenses and speed up decision making. The Wall Street Journal reports that the company told employees it will reshape some of its teams, particularly in global technology.
Walmart says their first quarter profits slipped and they have to raise their prices as a result of the tariffs, threatening their low price model.
It started with a shockwave through America's biggest retailer. Reports say President Trump, furious over trade issues, launched a storm of tariffs. Walmart fired back. In a bold move, the retail giant pulled parts of its supply chain out of the United States, blaming the rising tariffs for making their low prices impossible to keep. Trump pushed Walmart to absorb the costs, but the company refused. Instead, they raised prices across the board, rattling households already burdened by inflation. Moments later came more news. Walmart warned of even more price hikes and asked shoppers not to panic buy. But panic was already brewing. Behind the glowing signs of America's retail titans, a harsh reality was emerging. Walmart and Target, long seen as symbols of retail security, now risked losing access to vital goods amidst this tariff war. Imagine walking into Walmart for your usual 500-gram beef tray, and overnight it jumps from $9 to almost $14. A bag of lettuce? Up 30% cereal? An extra $2? The grocery aisle had turned into a battleground, beyond the United States. So, yeah, the ripple effects were severe. While Trump accused Walmart of betraying American workers, food shortages began creeping into countries abroad. Disrupted supply chains, jammed ports, and canceled shipments left places in Asia and Africa without essentials like rice, cooking oil, and canned meat. Supermarkets in Southeast Asia saw U.S. imports disappear, and prices skyrocketed from Nairobi to Manila, leaving families struggling. Trump's tariffs didn't just spark a U.S. political battle, they ignited a global crisis. Walmart's slogan of everyday low prices silently dropped, as the company tried to avoid a potential $25 billion loss in the second quarter of 2025. But higher grocery bills were just the beginning. By late June, Walmart announced the temporary closure of 10 major distribution centers. Over 50,000 workers faced layoffs. The logistics empire Walmart built, designed to keep shelves full, was on the verge of collapse. The culprit? Retailers pointed directly at Trump's tariffs, calling them financial grenades detonating across the supply chain. Wall Street caught the panic, too. Walmart's price hikes and warehouse shutdowns triggered fears of a retail meltdown. Electronics brands, clothing stores, toy makers, all tied to Walmart's purchasing power, now braced for the same tariff-driven cost increases. Without Walmart's bulk shipping, freight rates spun out of control. Shipping brokers warned that contracts, once stable, were now being renegotiated weekly. Global trade was entering dangerous territory. Analysts warned that without urgent action from the White House, America faced the risk of the largest retail collapse in modern history, right before the holiday shopping season. This report will break down how Walmart's troubles are rippling through retail. Stay alert. The cash in your wallet could lose value overnight. It all began on April 2, 2025, when the White House's Rose Garden became ground zero for economic warfare. That morning, Trump signed Executive Order 14,257, dubbed the Liberation Day Tariffs. Walmart's pullback wasn't unique. Other giants like Target, Costco, and Home Depot quietly struck deals in Vietnam and India, pulling supply lines away from China. This marked the largest supply chain shift since the 1990s. Ironically, tariffs meant to hit China were accelerating its replacements. Yet, it was U.S. consumers who were paying the price. By midnight April 5th, nearly every U.S. import faced a new 10% tariff, sparing only Canada and Mexico. Then came another punch. 4 days later, the White House slapped retaliatory tariffs on 60 trading partners. China got hit hardest, with a staggering 145% tariff on most exports. Almost overnight, Walmart's main Chinese toy supplier, Hunar Toy Factory, saw orders canceled and production cut by 70%. By the end of April, the American Toy Association warned that nearly half its members were on the brink of bankruptcy. Shipping rates between Shenzhen and Long Beach tripled. Europe wasn't spared either. At the ports of Los Angeles, Long Beach, and Savannah, hundreds of containers were abandoned as importers, unable to pay new tariffs, left goods to rot. Empty docks, once buzzing with Walmart-bound shipments, now overflowed with unclaimed freight. If this clog continued, the holiday season could arrive with half-empty shelves. Then, on May 2nd, Trump upped the ante again, threatening a 50% tariff on all European imports unless the EU conceded to his demands. A tense call with European Commission President Ursula von der Leyen bought a temporary reprieve until July 9th, but the financial damage was underway. EU markets lost $180 billion in 3 days. Germany's car exports froze, and the Euro Stoxx 600 fell 4.4%. South Korea braced for its own fallout, hit with a sudden 25% tariff on imported cars, threatening nearly half of Hyundai and Kia's shipments to the United States. South Korea's central bank forecast a 4% drop in auto exports to the U.S., putting thousands of factory jobs at risk. Meanwhile, Walmart employees felt the sting. With fewer trucks arriving and shelves sitting empty, worker shifts were slashed. Associates juggled split schedules, scrambling for hours to pay their bills. Warehouse workers lost overtime just when the summer ramp-up should have started. Unions raised alarms, saying these tariffs weren't just targeting nations, they were punishing American families. On May 28th, the U.S. Court of International Trade ruled that Trump had overreached his EPA authority, halting most tariffs temporarily. But instead of relief, it bred uncertainty. Businesses asked, what happens when the pause lifts? Would tariffs snap back overnight or even rise? Walmart was already staggering under losses nearing $25 billion for the second quarter alone. Factories in Vietnam and India, eager to pick up Walmart's orders, warned they couldn't replace China's scale overnight. Textile mills in Hanoi had backlogs stretching 6 months. Indian electronics plants struggled with missing parts still sourced from China. The shift was slower and messier than anyone expected. And honestly, grocery prices in America just kept climbing. Since Trump's 145% tariff kicked in, sea freight rates from Asia to the U.S. shot up. What used to cost $3,500 per 40-foot container surged to $6,500 in 3 weeks, with predictions it could hit $8,500 by summer's end. Blank sailings, where ships skip ports to avoid tariffs, increased 20%, causing weeks-long delays. Walmart's just-in-time system, built over decades, was now buckling. Small and mid-sized importers suffered too. Banks pulled financing on companies relying on Chinese goods. Venture capitalists backed off logistics startups, citing wild freight rates and global instability. Without fresh capital, innovation in supply chains stalled. Credit agencies downgraded retail, logistics, and manufacturing sectors, warning the tariff crisis was dragging the broader economy down. On land, companies raced to stockpile goods before the next tariff wave, sending warehouse rents soaring. Fees for bonded warehouses quadrupled. Startups like Flex, which rents warehouse space, saw a 6-fold spike in demand, creating waitlists for the first time ever. Meanwhile, Walmart's shuttered distribution centers burned cash daily, storing containers with nowhere to go. Agricultural exporters faced their own crisis. Walmart's network once spread U.S. beef and produce across Asia. Now, cold storage was packed with unsold goods, their sell-by dates ticking away. Some meat spoiled before even leaving the port. Farmers, still recovering from the previous trade war and the pandemic, saw their hard-won gains wiped out. Perhaps the most painful hit for Americans' economists estimated these tariffs alone would cost the average household around $1,000 more per year. In May, Walmart's CFO, John David Rainey, shared grim projections on CNBC beef climbing from $12 to $14 per pound. Guangdong Patio sets up $60, and a child's $350 car seat from Suzhou now priced at $450. Walmart's commitment to low prices was under siege. Even their digital marketplace, designed to rival Amazon, took a hit. Small businesses importing home goods, toys, and apparel either raised prices or stopped selling altogether. The dream of a fast, affordable Amazon competitor was fading. Across oceans and across town, the cracks in the just-in-time model were showing. Cargo ships sat idle offshore, stores looked emptier, and the White House's promise that tariffs would revive manufacturing sounded increasingly hollow as families paid more for basics like milk and cereal. Warehouse workers sat idle, caught in a costly cycle of delay and confusion. And behind closed doors, Walmart was ringing the alarm. On May 28th, a leaked internal memo called Project Triage sent shockwaves through Wall Street. It confirmed widespread fears. Walmart was preparing to suspend operations at 10 major distribution hubs over the next 6 weeks. From California to Florida, these closures threatened to ripple through local economies. Restaurants, gas stations, and truck stops near these centers braced for impact. School districts worried about falling tax revenues. Trucking companies started canceling orders for new equipment. In a twist of irony, many of these affected communities had supported Trump, only to now face an economic downturn sparked by his policies. The shutdown list read like a map of American commerce. Riverside and Fontana in California, Brooksville and Winter Haven in Florida, Pageland in South Carolina, Sanger in Texas, Elwood in Illinois, Groveport in Ohio, Plainfield in Indiana, and Menominee in Wisconsin. These weren't just dots on a map. They were the core of Walmart's logistics machine. Each center covered over 800,000 square feet, running 24/7 to support Walmart's vast 151 million square foot network. Now, 50,000 workers, mostly temps or agency hires, were told their paychecks would stop by June 30th. On Capitol Hill, lawmakers from both sides demanded answers. The House Commerce Committee launched hearings to investigate why Walmart was shrinking, while the White House claimed tariffs weren't harming Main Street. In southeastern Walmart stores, panic was already visible. Managers were ordered to stock every freezer to the brim, anticipating week-long delays in fresh food deliveries. Industry insiders quietly admitted what many feared. Walmart's just-in-time system was nearing collapse. As Walmart faltered, rivals seized the moment. Amazon increased discounts at Whole Foods, hoping to attract frustrated shoppers. Discount chains like Aldi and Dollar General expanded their grocery sections, eager to grab Walmart's displaced customers. The battle for America's middle-class wallets was underway. But keeping prices low and shelves stocked was no easy task when tariffs could change overnight. On social media, panic spread fast. On TikTok, the hashtag empty aisles exploded, racking up 12 million views in a day. Viral clips showed bare shelves, with users tagging Trump and asking, "Will bread and milk be next?" For many, this wasn't just politics. It was felt directly in grocery carts and fridges. Meanwhile, the broader economic fallout worsened. Walmart had become ground zero for a growing political and financial crisis. 50,000 families now faced temporary unemployment as supply chains crumbled. Across the country, people asked, were Trump's tariffs actually bringing back manufacturing or just driving warehouse workers into poverty? In Brooksville, Florida, the answer was clear. Everbright Sewing, a proud Walmart supplier, shut its doors after Walmart canceled 20,000 uniform orders. The owner was blunt. One phone call from Walmart's procurement team pushed us into bankruptcy. Everbright wasn't alone. Back in March, Walmart demanded that Chinese suppliers cut prices by 10% with every round of tariffs. Cookware, clothing, toys, all pushed to lower prices despite razor-thin margins. The toll was devastating. In Guangdong, the Hunar Toy Factory, a Walmart partner for 40 years, slashed production by 70%, laying off 130 of 400 workers in just 3 weeks. Overseas impacts aside, small U.S. businesses also suffered. The Small Business Association's confidence index dropped to 95.8 in April, below its 51-year average, as owners feared contracts could become unprofitable overnight. The logistics nightmare kept building. Container shipping rates from China to the United States West Coast jumped from $3,500 to $6,500 per container, with analysts warning it could reach $8,500 by mid-June. Shipping lines reduced sailings to dodge tariffs, leaving goods stuck at sea. On U.S. highways, trucking companies rushed to deliver pre-tariff goods, creating a short-lived boom that quickly collapsed. By late May, DAT predicted flat truckload volumes for the year, and Knight-Swift's CEO saw no recovery for the third quarter. Local carriers lost steady delivery routes, pushing drivers into unpaid furloughs or empty return trips. As cash dried up, small suppliers delayed payroll, cut insurance, and begged banks for loans. Economists warned that small business defaults could soon reach levels not seen since 2008. Walmart's retail ecosystem, built over decades, was unraveling. What replaced it? Uncertainty, layoffs, and shuttered storefronts. The ripple effects hit agriculture hard. Walmart's global network once moved U.S. beef and produce abroad, but now those goods sat unsold in cold storage from California to Singapore. Tons of beef passed their sell-by dates, forcing producers to dump products at a loss. Farmers, still recovering from past trade wars and the pandemic, watched their progress vanish again. The impact wasn't limited to farmers and truckers. Logistics firms, storage providers, diners, and gas stations near Walmart hubs all reported plummeting revenues. As one analyst put it, when a warehouse shuts, every truck outside turns to rust. The deeper danger wasn't just pricier groceries. It was the slow collapse of the invisible network that kept retail alive. Cardboard box makers, container yards, pallet suppliers, all on the brink. If these links failed, entire industrial parks built around Walmart could be left to rot. Faced with a projected $25 billion loss, Walmart launched a counteroffensive called Project Reset, aiming to rebuild its global supply chain within 24 months. First, they accelerated their exit from China. Before tariffs, about 60% of Walmart's non-essential goods came from Chinese factories. By early 2025, that number had dropped to 48%, and Walmart was rushing to lower it further by securing suppliers in Vietnam, India, and Cambodia. In Hanoi, Walmart planned a $1.2 billion investment to expand textile and home goods production, trading this for a reduced 25% export tariff to the United States. But this pivot was rocky. In April, the White House threatened Vietnam with anti-dumping duties up to 46%, only delaying them for 90 days. Walmart couldn't rely solely on Asia. Their second move was the Maiden Heartland Initiative, a $5 billion investment to build 3 factories in Arkansas, Ohio, and South Carolina, focusing on home goods and electronics. This was funded by a bond sale during a brief dip in interest rates. Walmart pledged $350 billion in U.S. investments over the next decade, aiming to cut overseas shipping times from 28 days to under 1 week. But could U.S. manufacturing ramp up fast enough to replace China? Walmart's third strategy sounded futuristic, a partnership with robotics firm Symbotic to expand an AI-powered system called Link 16, modeled after military data networks. With a $520 million investment, Walmart installed Link 16 in 400 fulfillment centers to predict disruptions and reroute shipments in real time. Expected to save $600 million annually. Walmart hinted they might rent this tech to other retailers, turning their supply chain into a profit driver. Yet, all these efforts depended on unstable politics. If a new administration reversed Trump's tariffs in 2029, Walmart could be stuck with billions in unnecessary U.S. factories. But moving too slowly risked further tariff shocks. Every new White House tweet on tariffs forced Walmart to redraw its global strategy in just 72 hours. Even for a $680 billion company, a brutal pace. Meanwhile, Wall Street fixated on one question. Would Americans benefit from more made-in-USA products? Or just pay more for the same toaster? The answer remained buried under tariff charts and shipping invoices, but the financial pain was obvious. Just 6 weeks after the tariffs, Walmart's stock plummeted 11%, erasing nearly $37 billion in market value within 30 days. The panic spread across the sector. Index funds dumped retail stocks, accelerating Walmart's decline. FedEx slashed its earnings outlook, its stock plunging 11% in a day, the worst drop since 2020. The Dow Jones Transportation Index fell 17% from November highs, and Prologis, the warehouse giant, saw its stock fall 9.6% after Walmart's closures. Within 48 hours of Walmart's stock crash, over $6 billion fled from retail and transportation ETFs, the biggest outflow since 2008. Bond yields for BBB-rated firms shot up, forcing Walmart to pause its $5 billion bond sale. Meanwhile, the VX Index, Wall Street's fear gauge, surged past 26, flashing red alerts across the markets. Overseas, the tremors shook global confidence. Brussels warned that $380 billion worth of EU exports to the United States, 70%, were now in jeopardy. Europe threatened $95 billion in retaliatory tariffs if the United States didn't back down by July 9th. But even that wouldn't fix America's $226 billion trade deficit with Europe. Canada and Mexico voiced their concerns, warning that new tariffs could threaten hundreds of thousands of U.S. jobs. As the deadline loomed, the question was clear. Would Trump reverse course to preserve alliances, or double down and risk a global economic Cold War? Walmart's $25 billion in losses and 10 shuttered centers weren't just corporate problems. They were a warning sign for the entire world economy. At home, consumers felt the sting on every grocery bill. Reuters reported Walmart raised prices by 2 to 3% nearly overnight to offset the tariffs. But that was only the beginning. If the White House stayed on its aggressive trade path, the fallout wouldn't stop at retail. Manufacturing could slow, job losses could rise, and the global financial system could edge closer to another crisis.